So in my previous videos on Shell, Exxon and BP, people tend to ask, can you have a look at Chevron? In this video, I will be giving my personal opinion on whether I think Chevron stock is a good buy at its current price, along with looking at some of the fundamentals and the technical analysis. Now for me personally, I think there's only really one key reason why you would even consider buying this company, and I'll come on to that in just a second. But first, as always, remember this is not financial advice. You should do your own due diligence when it comes to making any investment decision. If you haven't done so already, please do consider subscribing and turning on the bell, and if you agree with me that the last season of Game of Thrones needs to be re-recorded, then make sure that like button is turned blue. Now as always, on the pinned comment below, you can sign up with eToro, sign up, deposit, make a trade, and you get access to the eToro chat room. Now swiftly moving on with Chevron stock, let's have a little look at the chart over a 5-year period. We can see that if we go back 5 years, Chevron is currently up around 25%, which is not too great. 5% a year return growth. It's, well, I mean, if you bought Apple, obviously you'd be in a much better position. That said, we can see it did break out of that channel of 25% and it did reach a 5-year high of around about $130. Then Rona hit and it absolutely crapped its pants, as did most stocks. It then showed signs of recovery and then had another little dip. And now Chevron is riding around about 8% away from its pre-pandemic levels. If you didn't know already, the ticker symbol for Chevron stock is CVX, that's Charlie Victor X-Ray, and they currently have a market cap of $212 billion US dollars. Simply Wall Street's crazy valuation method says that this company is currently 23% undervalued. Chevron unfortunately is not profitable, so there's no PE or PEG ratio, and if we look at their assets and liabilities, they are well covered. If we look at the short term, there's 30 billion in assets with a 27 billion in liabilities, and if we look at the long-term assets, it's also a very clean picture. They have 211 billion in assets and 81 billion in liabilities. Now their debt to equity is quite good as well, coming in at around about 34. Now if you are looking at buying Chevron, this is the biggest reason why you should consider buying, if at all, and that is Chevron's dividend, which they have a good history of increasing. Their current dividend is around about 4.8%, which is by no means to be laughed at, especially given the current environment. Chevron's quite dedicated, as are most oil major companies, to making sure investors stay in the stock and continue getting their dividend. To be honest, that's one of the reasons why I like oil majors. They do really look after you as an investor when it comes to dividends. Now, in a recent earnings interview, their CFO Pierre said that they have had the strongest quarter they have had since the pandemic itself.
First, I'd say it was our strongest quarter since the pandemic.
They've had the highest earnings in terms of cash flow and also have increased their dividend and stuck to it. Now, I've got to give sort of a hat off here to Chevron for continuing to increase their dividend when the company is clearly hurting. It just shows how well they are cash reserved and how well structured they are, that they can continue making their long-term investors happy. So a big pat on the back there to all the oil majors that continued paying their dividends, and especially to the crazy ones that even increased their dividend. Now when it comes to investing in this stock, is it good value? Well, that's up to you to determine what value is. For me, I think if you can buy this company as low as possible and you're going to look at it and hold it forever with the aim of getting a dividend every year, then yeah, it makes sense in my opinion. But if you're looking at buying it and doubling the actual stock price, well, it's probably not going to be that type of company. It's heavily reliant on the oil price, and oil is riding around $60. And if you just go back a few months back, well, over a year ago, we can see that oil was actually even negative at some point, which was the first time in history. So these companies in the pandemic were having actually a double tough time when oil prices reached negative. But since then, the oil price has increased and these companies seem to be bouncing back stronger than ever. The CFO refused to predict the oil price, which I think is quite clever of him, but he did say that if they have a $50 Brent oil price, then they can continue growing their free cash flow by 10% year on year.
We're not counting on higher oil prices. We showed during our investor day that at $50 Brent, we could grow free cash flow more than 10% a year over the next 5 years.
Which is great to see that the company is so well structured, they can even survive with semi-low oil prices. Now, I know the video is short and sweet. I was going to do a video on Virgin Galactic stock, but they just put out earnings and I want to redo that whole setup. So if you want to hear about Virgin Galactic stock and what my plan is, and as the patrons will know, plug for the Patreon group there, I do have a very small position in that company too. So if you want me to do an updated analysis of Virgin Galactic and why I'm seriously considering adding to the position, let me know down in the comments and I'll see what I can do. That's it from me. Let me know your thoughts on Chevron. I'll see you in the next one. Take care. Peace.